Hello viewers, how are you all? I'm fine. So I'm here again with ICT Concepts, and today I'm gonna talk about the clarifying breakaway gap, also how to take the high probability entry. I will talk about two entries. One I have taken to my funded account, and another one I did the paper trade. So I will discuss both of them. In these topics, you will learn what I have taught you this many days. You will learn that it actually works. Everything I tell you, I did it before. I journal it and I backtested it. Then I'm telling you. So you have to believe me. Otherwise, you are just wasting your time. And one thing which is very important, whenever I will show you something to my chart, you have to go back to your chart and you have to mark them. Otherwise, you can't learn. So it's very important. Today was a very big day, and I outlined every level to my Twitter. If you are not in my Twitter, please go to my Twitter account and follow me over there. You can follow me, actually, it's up to you. But if you see at 9:21, I tweeted this. Look at NQ price now. It's inside the 15-minute fair value gap. If this gap can hold the price, market will go lower and clear the sell side. If it failed, you know what will be the target. So the price was over here to this 15-minute fair value gap. I was expecting that price will go lower. Then the next tweet I did at 9:34, just after the 9:30 opening. So in that tweet I told you, mark your 8 a.m. fair value gap for Nasdaq. It's important. I was talking about this fair value gap, this 1 minute fair value gap, and I tweeted it right here. Then I tweeted, if you were on this trade, close it now or take partial. I tweeted over here. I tweeted it when it has cleared the sell side liquidity, but for writing that the next candle was the bull candle a little bit later. I'm sorry for that. After that, I my next tweet was at 9:46, just after the PMI news at 9:46. There I told you, let's see if it can break the 8 a.m. fair value gap for buy side. That means I was talking about this fair value gap, and I tweeted it to this specific candle. I was actually expecting it need to close above the fair value gap, so I tweet that. And then the last tweet, you should have taken your partial. It was over there. When if you have already watched my the execution video to my Twitter account, you already know that I recorded it, so you will know that I took my partial over there. So that was the Twitter outlining before actually printing the price to the chart. Some of you guys actually told me that can you please do live stream, but you know I'm not ready for the live stream yet. So I did this, and so that you guys can be confident that whatever I'm telling you here, it actually works. So it's a very long introduction. Let's go to the chart. I will discuss all of the price action to the morning session. This is 1 minute chart for Nasdaq, and I'm using the reply mode from 9:28. Before that, I will just like to mark some level so that you guys can understand why this level was important. This was the 8 a.m. fair value gap. Let me just change the color, and I need to go to the 5 minute first. At 5 minute, you will see this is a very nice fair value gap. This is a very nice 5 minute fair value gap. Let me just mark it as a live 5 minute fair value gap. And this is your sell side. You see relative equal low. This is your sell side. You will know about the high probability and low probability as well, as I'm just speaking about high probability trade entry and low probability entry for last 3 days. So you will know that. Let's go to the 1 minute chart first. Okay. So when 9:30 market opened, it went below this 8 a.m. fair value gap. Now, this fair value gap has marked as a I fair value gap. Why? Let me go step by step. I know it's gonna be a little longer video, but it's for your, understanding, guys. I have no idea how to make it shorter. So if you see, price actually traded this 15-minute fair value gap and it failed to go higher. Instead of going higher, it came lower. So this fair value gap is the lowest point where price can come and then retrace, but it didn't do it. This is a very clean run. You see, very energetic run. When I have seen this run, I was expecting that this fair value gap will act as a I fair value gap. That's why I told you, look at the 8 a.m. fair value gap. It's very important. When it has actually traded the consequent encroachment of this fair value gap, and I was watching, it can break the consequent encroachment or not. You see, it actually failed to break the consequent encroachment. It takes 3 attempts to break it, but it failed. Guys, I'm talking about the bodies, not the wick. The bodies failed to go above the consequent encroachment. When I have seen this and it break lower again below this fair value gap, the very next candle I was expecting to touch the fair value gap low for this sell side liquidity. And here, when this actually, let me mark it, it will be easier for you. When I have seen this has actually just touched the lower part of this fair value gap, I took my entry over there. I put my stop loss above, you see, this high, and my target was just just one tick below the sell side liquidity. So that was 2.11 risk reward ratio, near about 1:2. So I took that entry to my funded account and price beautifully traded over there. So I closed my trade over there, and then I tweeted, uh, if you are actually in this trade, then please close the trade, otherwise you can take your partial. It's because I was expecting that it will clean the sell side liquidity. That means they're relatively equal low. Always, guys, I recommend you to mark some equal lows. Don't mark one low, single low. Try to mark the equal low. It will help you to, you know to mark a specific level. Otherwise, if you mark every low, it will be so many line for your sell side. You will never know when, from where price can retrace. And you can ask why this is not equal low for me. Obviously this is equal low for me, and I should have take some partial below this low, but I took my risk and I was actually waiting to clear this sell side liquidity. The reason was, there was a very nice 5-minute fair value gap just below this equal lows. Actually, I'm thinking even new that the in that way I'm talking. Okay, I know there are some people there, they actually know better than me. I'm not talking to you guys. I'm talking someone who are very new to this concept. So please don't mind and don't think I'm offensive. Okay, let's go furthermore. What it did, it cleared the sell side liquidity. Just tap to the 5-minute fair value gap. One of my brother yesterday, he asked me that, can I make a video about after clearing, I mean the sweeping this liquidity, how do I know, price will go lower or not? I told you that if I see any, big run after clearing the liquidity, if I see a very big run, like this type of run, or if I see a very market structure shift below the sell side liquidity, then I start to think that market will go more lower. It is not sweeping, it is actually going toward that way. So here, how do I know that it will reverse? See what price did. It actually, okay, I'll just stop here. Is it clear that market actually came here to sweep this liquidity? Or you have any idea, you have any, confusion that market can go lower? Is there any sign that market will go lower? It just came below this sell side liquidity and tap to the 5-minute fair value gap. I think there is no fair value gap. It just sweep the liquidity and then gave you a very nice market structure shift to the upper side. That means it came here to clear the liquidity, not this is its direction. It doesn't want to go, more, more downside. It won't go over there. It just came here to clean the sell side liquidity and gave you the upper level market structure shift. What I was teaching you for last 3 days, that wait for the high probability entry. So though I took this entry to my account, I don't recommend this entry for your trade journey. I want to I want you to take this entry. After clearing the sell side liquidity and also tapping to the 5-minute fair value gap, it went above this high. You see, is this a very nice market structure shift, or you have any confusion about this market structure shift? This swing high actually traded this fair value gap, so it is valid for me to mark as a swing high for market structure shift. You see, there is another swing high. It has also broken. Let me actually, okay. This there is also a swing high that has broken by this candle, but this is not my market structure shift. If you want to know which high you should choose for your market structure shift, please go to my playlist, and from there to the study section you will find a video called how to avoid losing trade. Please watch that video. I have described everything about market structure shift, which swing high or swing low you should choose for your shifting market structure. I think it will be, insightful for you guys. That is further information for you. Okay, so when I have seen this market structure shift and the very next candle, I forget to tell you something. Just see it closely. It has just it has just closed above this fair value gap. This is 8:30, 8 a.m. fair value gap. It has closed above this fair value gap. So when this candle was forming, I tweeted, let's see it can break this fair value gap or not. What I mean by breaking this fair value gap, I mean if it can close above the fair value gap or not. If it didn't close and the very next candle, if I see it has closed over here, that is also, the breaking this fair value gap for me. And now there is two fair value gap. One is here and the another one is here. Guys, i'm I'm just telling this every day to you. I i don't know how to be more precise about this, but I'm telling you every day. If you see after cleaning the sell side liquidity, I'm just giving you an example about the sell side liquidity, you will think vice versa. I mean, if it cleared the buy side liquidity, then you will think that way. I told you, if it has cleaned the sell side liquidity and then gave you a very nice market structure shift, also sorry, also to fair value gap, then you will take your entry to the first fair value gap and your stop loss should be below the consequent encroachment. That means your entry should be when it will tap to the fair value gap high, you should be in the market and your stop loss should below this consequent encroachment. I mean little bit, further from the consequent encroachment, because the wick can come little lower than the consequent encroachment, and my target was over there, uh, to this high. That was my buy side liquidity. This was my buy side liquidity. Buy side liquidity, where is it? Here. And I took partial above this equal high. This buy side liquidity, you see, this high, this high, this high, they are the equal high, and this is also the lower of 15-minute fair value gap. It was just after the PMI. So this run was the PMI run. If you have seen the calendar, this was today was the PMI. So this was the PMI session run. So when price came to the, I took an entry above this 8 a.m. fair value gap, and then I add more over here when it came to this fair value gap. You see, when this candle came, I was in the market, and when it came again to the lower, the this fair value gap, I add more. And then you can see price, where what did it do? Okay, here you see price came to the consequent encroachment. What is this, guys? What I told you about this price, about this gap, this is your breakaway gap. So price shouldn't come below this consequent encroachment. Please watch my, okay, I will upload the short to my channel as well, so that you guys can watch that. I put my stop loss just below this consequent encroachment, and I was confident if market would like to go higher, it won't go below this consequent encroachment. And then you can see market was hanging around over here. When I have seen this, I was little bit confused because it shouldn't do it like that way. And then I have discovered there was a breaker, so I marked that as a breaker. That was my breaker. Back, okay. So that was my breaker, and I was watching this breaker. How did it actually work? And let me actually close this one. And this one I also don't need right now. So there was your breaker. This is the lower fair value gap consequent encroachment, and this is your fair value gap. So price actually respect this breaker, and then here I took my first partial to this candle. I took my first partial, and then I get stopped out over here, uh, because when this high was broken, I placed my stop loss above the my entry point, so I get stopped out. So that was the reason for taking this entry, and in my opinion this is a high probability entry. After PMI, you have to expect some choppy movement. Always you have to think about that. So that's why I trialed my stop loss too fast and prematurely. I shouldn't do it, but I did it because it was just after the PMI. So I didn't want to be chopped up. I just took some partial and then I stopped out. But if you see, price actually came to the consequent encroachment of this fair value gap again, and last it cleared the buy side liquidity. So that was the reason for taking this entry, and I talked about this entry as well. The reason was this was very clean sell side liquidity. Also, the fair value gap market should have come and clean this sell side first, then it will go higher. So that's all for today. I hope it will be insightful and it will increase your confidence about the breakaway gap. What I told you about breakaway gap, whenever you will see this setup will form, then you can confidently you can place your stop loss below the consequent encroachment. So I think it's insightful for you guys. If you are new to my channel, please subscribe to my channel. And if you really love or like my videos, my talking, my information, give me a thumbs up. So that's all, guys. Take care. Bye bye.